All right, traders, it is the 4th of July, 2017. My name is Jameson. We are looking at a daily vertical bar chart of Brixmore Property Group. The ticker is BRX. Let's start from the top. So if we look at the RSI and the STO, the RSI is in bullish position here. And I like that we actually have some organized trading here, because if we do see a breakout, there's just some nice bullish confirmation that presents. Momentum's a little upward here, otherwise pretty neutral close at the present time. If we look at the trend's terrible, right? I mean, we had this huge decline that's present, and if we do a reverse trend line here, I'm not going to draw it here on lows. I'm actually going to draw it here, and I'll tell you why. I think, one, we're identifying the trend. And I think retrospectively we can see, if we draw a trend this way, that although prices are declining, that we became oversold. We're oversold relative to the trend. And we can see that prices trade laterally here into the supply line, right? So when there's a decline, if we have a bearish descending channel, the upper trend line is actually the supply line. And then this would be resistance for bears, or the support line. So we rally up and we reject the 200-day moving average into supply. We break back down, back in a supply line, and back in a supply line. If we look at the volume at these key points, we can see lots of sellers. And again, now we break down, we lose a 50-day moving average, we rally back up, and if you look when we rally, there's nothing really. There's not a lot of I don't note that there's expanding demand. There's not a lot of buyers. In the absence of demand, we're going to retest support, and now as we break down, we have a lower low, right? This is the lowest low of this section that's here. There's a sign of weakness, and the character at which that we did so on expanding volume is very bearish. And then we rally into the supply line again, and you can see that as we rally into it, we're rallying into this prior level of support. We have no upward fall through. We're confirming this level of support as resistance. You can see on this rally, there's really not a lot of buyers. And then now when we break down, there's a ton of supply. And then it's back into the lower trend line, and then we trade laterally back in the supply line. And as we break back down, we can see expanding volume. But now we can see that we're oversold again relative to the bearish descending channel. And now we're trading laterally. Well, what's different this time? The reason this came on my scan is because of the high volume. So at this point, right here, something's happening. So we have a huge climactic volume that's present. I don't like the price spread, right? So if you look at the price spread that's present, on the session that's associated with the climactic buying, it's a very narrow price spread. So I think that's a warning sign, but whatever. I'm not going to pass judgment on it. I'm going to observe it. Obviously, it's going to be a key session. It is an important session, okay? What I don't like about it is a narrowing price spread. If this is all buying, and there is so much buying, how come we didn't have increased ease of upward movement, and why didn't we close at highs? The fact that it's a narrow price spread suggests potentially there is some distribution. Why do I think differently though? So one is that when we break down this time, we rally higher, we confirm this level of support as resistance, we break down again, supply is contracting. And then now as we rally back higher, we reject this level of support, we're confirming as resistance, but we're seeing the emergence of demand. If we look at the prior year that's available here, there has been no demand. So now we rally through with expanding demand, and then we break down very bearish. There's a lot of volume here. So I then ask, if we have so much selling volume, why didn't we break through? This is a big effort, little reward. Big effort, no reward. There's your third law fulfilled or unfulfilled for your Wyckoff laws. So you have to ask, if we have so much effort or so much supply coming in, why didn't we close lower? And it's because I suspect there's some bullish absorption present. And again, this is a very key, this is a very bearish close. We closed below support on expanding volume, closing at lows. Why didn't prices just break down from that point? They reversed higher. That creates a spring. And then we see these huge volumes that presents. We rally away, and then we break down with increased ease of downward movement. It looks like supply is still there, but it's a higher low. That suggests maybe we're seeing some bullish absorption through here. And then we rally up above this level of resistance, above the 50-day simple moving average, which is the first close above the 50-day simple moving average since the breakdown in February. So I think there's something, this is a changing character that's present. So in observing, I think the shift in momentum and the rotation of supply from weak hands to strong hands, I think we're seeing some absorption of the overhead float that's present. Okay, and while I'm mentioning overhead float, let's go to shortsqueeze.com. We type in BRX. Look at this. 23% of the float is short. You know, that's only, what are we looking at days to cover here? It's only 2 days to cover. 23% is very high. They're going to have to close at some point in time, and I think any upward pressure is going to encourage them to close. So we may actually see a squeeze, which would support our bullish objective into the 200-day moving average. So let's get to the bullish objective. We have some consolidation. We finally have some lateral trading here. We can measure cause, and that cause would give us an effect of 2150. So given the observations that we have here and the close for the previous session, you know, we have our downside risk is about 5.5%. You know, the invalidation point would be a close below this level. Like, you'd absolutely stop out. Because we're looking at about a 5.5% downside, and my tolerance is, 6% stop loss on a full position. You know, maybe take a half a position, and then if it breaks back down and holds this level, you add to your position. But again, we have this key session here. This is very important. We back tested, it didn't break down. This is you have to be bullish above 1750. So I like a half position here, and if prices break down, I would maybe add a quarter, and if we break above and we confirm the 50-day simple moving average as support, then maybe I'd add to that position. But again, in observing these, the characteristics of price action that's present, we can see that we have a good risk-reward ratio. I can see that there's the potential that at least I can observe a breakout for relative strength. We're seeing the financial sector is outperforming, and I can observe to see if the index is seeing any rotation. So I like what we're seeing here, and let's follow it closely and see how things go.